We are heading into Memorial Day weekend, which means the bond market will be closed on Monday, and things tend to get quiet, obviously. But this week wasn't short on drama, even though a lot of it kind of felt like chaos with no clear reason why. And starting with consumer sentiment, which dropped again. According to the University of Michigan, sentiment's now at the second lowest reading on record. But while the Fed keeps saying the economy is in great shape, everyday Americans clearly don't agree. And honestly, based on the numbers, they've got a point. Moody's downgraded the U.S. credit rating last week, and this week they followed up by cutting the ratings of Fannie Mae and Freddie Mac. No change to loan pricing or guidelines, but it is a reminder that agency mortgage strength is directly tied to how confident investors feel about the federal government. On to housing, new home sales for April were solid. Builders are still doing better than resales, partially because of incentives to help buyers offset high rates, which we can show you how to do with your listings as well. Existing home sales were rougher though, came in well below expectations. April closings were the slowest April since 2009. Inventory's still tight and demand's there, but people are just kind of waiting for affordability to improve. Happy to talk about how to achieve that in the market now before everybody jumps back in when rates do eventually come down. And home price appreciation is expected to slow down, but not stop. Fannie Mae actually just revised their housing outlook up, and now they're expecting nearly 5 million home sales in 2025, and they're thinking mortgage rates will fall to almost 6% by year's end. They're calling for 4.1% in terms of home price growth this year, and just 2% in 2026, which is slower but stable, and it does amount to a big gain since that growth is based on the purchase price, not what you put down on it, which could be really minimal. But on the policy side, Trump floated the idea of a 50% tariff on European Union goods. He said that this week, but like most things, it'll probably get negotiated down. And Fed Governor Waller said if tariffs come down to 10% by July, we'd be set up for rate cuts later in the year, which is, just a real sign that most everything is hinging on inflation and less on the job market. And speaking of inflation, it's not just us. It's ticking up in Japan as well as the UK. And that really matters because global economies are connected. So what happens abroad can impact our bond market. And other news, we kind of got a weak 20-year bond auction, which did hurt us a bit. And we're seeing more headlines about the debt ceiling. Interestingly, the tax bill that just passed actually includes an increase to the debt ceiling that's near its limit. And this does add to inflation fears and, if more money starts hitting the system. But next week, we're going to get home price appreciation, GDP, and PCE inflation numbers. So we'll see you then. PCE will be the big one.